Stock market versus real estate investing. Which one is better? The debate that will never end. Real estate is something that has existed since the start of civilization. The more land a person had, the more richer he was considered. The landlords were considered elites of the society, and owning a piece of land was the dream of so many people. Fast forwarding a few centuries, the entire game of wealth creation shifted gears with the introduction of the stock market. Creation of wealth was never so easy. An ordinary person could now access this market and make big money out of it. But both of those investments have shown their deadly cons from time to time, whether it be the 2008 market crash or the bubble crash of 2000s. Then which one should you actually go for? Is it the stock market that will make you a millionaire faster, or is it the real estate investing? In today's video, I'll make it crystal clear for you guys. And after this video, I'm pretty sure that you guys will finally get a winner for the ultimate debate of real estate versus stock market. Concluding a winner is not that hard once you understand a couple of concepts. We will be discussing those exact concepts today, and by the end of the last concept from the checklist, you will get your winner. So get fully focused for the next couple of minutes, and we'll start right away with the second point, the leverage and cash flow. We'll get to the first point a little later. When it comes to leverage, real estate can beat stock market investing any day. With an investment of $100,000 in the stock market, you can gain control over the stocks worth $100,000 only. But with the same $100,000 investment in real estate, you can get control over a property worth $1 million as well. Now this is the leverage I was talking about. Now coming to the cash flow, stock investing does a pretty decent job here. The dividend yielding stocks have proven to yield a consistent dividend of up to 2.5% for more than 4 decades now. But with the real estate, it has proven to fetch a yield of 6, 8 or up to 10% yield depending upon the locality and the neighborhood. So if cash flow fascinates you, real estate is worth considering where continuous rental income can be ensured. But stock market can beat all of these real estate plus points with its single superpower, the superpower of growth. Stock market investing can make you filthy rich within a couple of years, which is almost impossible in real estate unless you are living in a bubble. For example, the growth of Tesla stock. The Tesla stock was priced at $88.60 on 3rd of Jan 2020. And within a couple of years, it is worth $927 each. A mere $1,000 investment in Tesla on November 2011 would be worth just over $204,000 now. That's more than 20,000% returns. Well, this is the power of stock market. Making one right decision with the correct stock can make you filthy rich within a couple of years alone. Thus, when it comes to growth, the stock market wins it undoubtedly. But please don't consider stocks as the ultimate winner. The third point from the checklist will answer your why. Real estate investors wrote the tax code. As you are watching a financial video, I'll assume that you know how uncomfortable taxes could get. Let's understand how taxes work in the stock market first. Let's say you make $1 million in the stock market this year. However, your wealth is only on paper, and if you wish to spend that money on yourself or buy another asset, then you will first have to sell off those stocks, and the moment you sell them, you will be taxed under the name of capital gains. Now the tax percent for long-term gains are as high as 20%, and for short-term gains it's even worse, up to 37%. But with real estate, there are multiple ways to avoid taxes and use that very money to grow your wealth even faster. For instance, instead of paying for the entire property upfront, you can deduct the portion of mortgage attributable to interest payments on your tax returns. You can also recover the cost of income producing rental property through depreciation. Depreciation can highly work in your favor, as depreciation expenses often result in a net loss on papers, even if the property produces positive cash flow in reality. These losses, along with other expenses like insurance, utilities, repairs, when deducted from ordinary income, can reduce the sum of taxes to be paid. Even if you end up selling a property, you can avoid paying capital gain tax by purchasing another bigger property. Tax incentives in real estates are actually unbelievable. That is why I say real estate investors might have written the tax code as well. But you should not make a decision on which investing you should prefer unless you check out the first point from the checklist, which is technically the last one in this video. Now the reason I kept this checkpoint at the very end is because it would make a better sense once you actually know the pros and cons of both estate and stock investing. Now let's dive into crucial and influencing factor of investing: mastering the price to earning ratio. In order to figure out whether any investment is a good one or a sour one, we use the price to earning ratio method, or simply P/E ratio. Here's an example. Let's say you bought a real estate property worth $1 million and the rent for that very property is noted at $20,000 for that locality. Now the annual rental earnings will sum to be $240,000. Now the P/E ratio will be $1 million by $240,000, which is the price upon earnings made. This simply means you had to invest $42 to make $1 of earning annually. That's a pretty bad investment, brother. Just take the example of bank FD with a 6% rate of interest that comes across to be 16/1 on P/E ratio, which means the bank can simply pay you $1 for every $16 you had invested. Now here's when the stock market wins with a P/E ratio of as great as 10 to 12 or even lesser at some times. In simple words, the stock market can and had proven to come up with a higher rate of returns and a great potential of making bigger profits, which real estate investing lacks very badly. Throughout the times, the stock market has proven to provide a CAGR of 15 to 16%, whereas real estate has struggled to provide a CAGR of 10 to 12%. If you had watched the video carefully till now, you must have started understanding the things. And many might have voted for a winner as well, which undoubtedly is stock market, right? As it provides a greater return on your investment, holds liquidity, and is easy to start with. But I would like to highlight a mind-boggling fact about the millionaires and the billionaires the world have ever seen. Over the last 2 centuries, about 90% of world's millionaires have been created by investing in real estate, and about 24 billionaires are real estate investors. Real estate has been a fascinating game to play and pretty difficult to master. Even the famous entrepreneur and the author of Rich Dad and Poor Dad, Robert Kiyosaki, himself is a real estate investor and doesn't believe in gambling in the stock market. Stock is pretty good and healthy investment option for the advanceries and the experts as well. But the real estate is the real property, as the name suggests. What is it about the real estate that 90% of the millionaires around the world relied on it to become who they are today? And can stock market be truly concluded as the winner over real estate? The answer is a no. The stock market is something that came into existence in the last couple of centuries, but real estate, it has existed since the start of civilization. There are a couple of reasons and secrets that you should explore in order to actually understand why those 90% of world's millionaires choose real estate over stock market investing. Remember, there is always a group of multi-billionaires we don't know exist, and the reason they can safeguard their identities is because no Forbes or business magazines can make an estimation on their net worth. There is a bigger picture to this debate. And if you truly wish to know the secret and the ultimate reasons of why real estate might win over the stock market, the second part of the video awaits you.